Investing in the stock market can feel overwhelming for beginners, but with the right approach, it can also be one of the smartest financial decisions you make. Picking the right stocks isn't about guessing, it's about understanding key principles and doing your research. In this guide, we'll explore some simple yet effective steps to help you identify winning stocks. The first step is understanding the basics. When you buy a stock, you're essentially buying a small piece of a company. This means your success depends on the company's growth and profitability. Before investing, ask yourself, are you looking for long-term gains or short-term profits? Long-term investing focuses on building wealth steadily over time, while short-term trading requires frequent buying and selling based on market movements. Having clear goals is essential to guide your stock picking strategy. Next comes fundamental analysis, a key tool for evaluating a company's financial health. Start by examining the company's earnings, revenue growth, and debt levels. Look for metrics like earnings per share (EPS) and the price-to-earnings PE ratio to understand whether a stock is undervalued or overvalued. Additionally, analyze the company's industry. Is it part of a growing sector like technology, renewable energy, or healthcare? Companies operating in booming industries often have higher chances of success. Another important factor is management and leadership. Research the company's leadership team and their track record. Are they innovative? Do they have a clear vision for the future? A strong management team can make a significant difference in a company's performance and growth prospects. If you're interested in short-term trading, you'll also need to learn technical analysis. This involves studying price charts, trends, and patterns. Key tools like support and resistance levels, relative strength index (RSI), and trading volume can help you predict short-term price movements. While technical analysis is great for traders, long-term investors should focus more on the fundamentals. Managing risk is another critical aspect of successful investing. Never put all your money into a single stock. Diversify across industries to reduce risk. Set stop-loss orders to limit potential losses, and most importantly, don't let emotions drive your decisions. Fear and greed often lead to poor investment choices. Stick to your plan and avoid making impulsive moves based on market fluctuations. For beginners, it's best to start small. Focus on well-established companies, often referred to as blue-chip stocks, as they tend to be more stable and reliable. Stay informed about market trends and keep learning. Books like The Intelligent Investor by Benjamin Graham or Common Stocks and Uncommon Profits by Philip Fisher are excellent resources for understanding the market better. Picking winning stocks is a skill that develops over time with research and practice. By focusing on fundamentals, analyzing trends, and managing risk, you'll be well on your way to building a successful investment portfolio. Remember, patience and discipline are the keys to long-term success in the stock market. Thank you for watching video.